Hello, LinkedIn. Me again. So remember the me again bit? That's what's in the back of the t-shirt that Ian's going to get. Don't know if I showed that last week, but it says, hello, LinkedIn. Me again. So I'll give that to Ian in a minute. Thank you very much for anybody that's watching this live today. We've got, obviously, Amelia next door who will be giving us a thumbs up. We've managed to secure our services again for this fabulous Friday. So I've got Iain Greer on with us from Monarch Financial Services, which we're going to go into in a wee minute. But as always, we have to give a big shout out to Bold Mango Media. Andrew, give yourself a pat in the back, right? He's just in. Obviously, Amelia was holding the fort. He was just in. He was away at a wee appointment. We'll show off his appointment when he gets it, or when you get the outcome of that. So thank you very much, Bold Mango Media. Andrew, give yourself a pat in the back. Amelia, if you manage to give us a wee thumbs up to say that we're all good, whenever you can. And as always, what we do, Iain, is, for the show, we give a shout out to Grow. So grab a cake, any cake. So I'm actually, we're actually spoilt with cakes today. So got a big giant cream bun. Look at the size of that thing, massive. And then obviously we can't have a show without a bit of honeymoon slice. So we'll get that. And what you got, mate?
I've got the vanilla Biscoff slice, which is awesome looking, to be honest with you. So
does look
thank
awesome.
goodness it's Friday.
Thank
Get a wee
goodness
treat
it's
for the
Friday.
weekend.
So Iain and I were having a kind of wee pre-meeting in Grow. So we already had something to eat in there. So the two of us are sitting here, not even thinking about the cakes. Oh, thanks, Amelia. They're thinking about the cakes right now. They're probably a
Dinner time.
A dinner time, a 4 o'clock snack. And we're not on the coffees today. We're both on the shakes because we're coffee out or nut. But Grow does not just do coffee and tea. It does berry shakes and stuff like that. So there you go. Thanks to Grow again, as always. Hugely appreciative of the cakes, coffees, and fruit juices.
Absolutely.
Right, Iain. So we as I say, this show's all about things that we think can help other businesses and people and giving back and stuff like that. So one of the things that your business does, and which you actually did for me personally, is help directors and business owners get mortgages, because especially when you're a start-up or a scaling business, you usually only really paying yourself a lot. So most directors are sitting just paying themselves whatever salary they can, maybe £1,000 a month or whatever. And then you're then trying to go and get a mortgage based on that. So we're not going to get too much into that just now, because you started your business around about the same time as I did. We're kind of in the middle of COVID. So talk about the business, what you do, how it started, and a wee bit about your journey, and then we'll go into the specifics on how you can help folk try and get mortgages.
Sounds good. So, yeah, basically September 2020.
Same year as me. What date?
13th.
Oh, so I was the 16th. You're 3 days older.
3 days older. I'll take that. I'll take that. So, but yeah, basically, I'd worked for a chartered financial planning firm in Glasgow who, during the pandemic, the housing market and everything was shut off, and they were selling out to venture capitalist firm, and quite ruthlessly and brutally just decided to get rid of mortgage advisors. So it went from one day having a job to the next day not having a job, and effectively created Monarch within 24 hours.
Aye, brilliant.
So logo was sort of designed, created a website myself initially, and just had to try and keep going, really. I'd not long bought a new house. 6 months beforehand, the day off lockdown, actually, we got the keys for it. My wife at the time was 7 months pregnant as well, so an awful lot going on. When it hits you, it hits you.
Aye.
So we'd really no option, because nobody was recruiting during COVID, because everything was closed down. So I'm just like, we just need to try and make this work somehow. Yep. So created a business, came up with a business idea, worked from the dining room in the house, and thankfully a friend of mine was able to house me and put me under basically as a trading name for FCA purposes, to allow us to start actually getting our brand name out and place business with the different banks and insurance companies, which we needed to do. In the background, I was submitting applications off to the FCA to be able to get our own authorisation, but again, that was taking 6 months because everything was shut down, and people working from home, etc. Everything it was crazy. It just seemed like everything was on a go slow. So But then about a week, we realised, because all my existing clients were still due up for remortgage and things like that as well, my phone never stopped ringing. And we had to then recruit. And I put a job advert out on Indeed. I managed to get like 124 applications in the space of 24 hours, which was amazing.
Is that still during lockdown?
Still during lockdown, yes. This is kind of towards the tail end of September. Done some interviews, narrowed it down to 5 or 6 people, and we managed to find Lauren, who's still with us, our first employee. And then I'm a big believer things happen for a reason in life, you know, and just it's all about things happening. And I got a CV through the door, which I thought was odd because obviously it was a LinkedIn online advert, and opened up this CV and it was from someone with loads of experience in the industry. And I'm like, wow, this is perfect. And because I was setting up the business, you know, we just bought a house. I was trying to think, how can I afford to bring in someone loads of experience to try and make things work? And we made the decision to bring on Alison, who's a second employee, whose CV was the only one that went to a junk folder.
Right, okay.
And she really wanted and liked the idea of what we were trying to do, that she actually printed off the CV and hand delivered it to my house.
Where does she come from?
She lives in Ardrossan.
Does she? Aye, so she's local.
Yeah, so I mean, we came down to Kilmarnock, put it through the letterbox and everything as well, and just opened it. I thought, wow, right, we've got Lauren, who had customer service experience, which for me was really important because I thought I can train all the other stuff.
Yeah.
You know, but someone who's really good customer service wise was crucial. And I thought, right, now we've got Alison, who's got the experience with, you know, the actual financial services side. We can hopefully bring her along as well. And it's been brilliant, really, since
She's still there.
Yeah, I'm still there as well. So
brilliant.
Which is good. I think with employees, I mean, now everyone who's with us, it's like a big family now. It's just good. You know, we brought everyone on, we invest in our people, we respect them, and you know, it's been nice to see them grow as well as the business. You know, and they get qualifications and opportunities to better themselves and their families as well, which is nice. So basically, set all that up 2020, in and out of lockdowns, in and out of people having to work from home. You know, remote working and all that fun stuff that was going on there. And I must say, the one thing with lockdown, I don't think my gardens looked as good since, to be honest, you know, with...
But she's seen mine. I get mine was amazing. And I never even got a huge chance to use it. And then we'd come out of lockdown and all that kind of stuff, and then I was just busy all the time. I had a obstacle course rig, so basically
I remember that.
That. So obviously all the monkey bars and all that kind of stuff. So I probably get one summer of using it properly, and then basically all the bains in the street used it more than I did.
Quite right.
Had to go around all their houses and say, right, you're signing a disclaimer that if your children are in swinging about in the monkey bars, then if they hurt themselves, it's not to do with me.
Yeah, absolutely. Definitely different times with the COVID, but I mean, it's tough setting up a business in that anyway, you know, the best of times, but you know, especially during the pandemic, it just seemed like everything was shut, everything was working from home. We eventually got our FCA approval in March 2021, so about 6 months, give or take, after setting the business up, and I was paying away 50% of everything I made to someone else to be under them. So I went from going 50% up to 100% of the income was coming to me then. And I was able to start properly investing in the business and, you know, putting money back into it to really drive us, you know, improving websites and things like that, you know, improving the CRM systems and things we're using. I was in control of that now, rather than having to use someone else's. And I think it's also been a massive factor for us being able to grow the business because we did set up in COVID. A lot of people always think of the doom and gloom, but I think of it as a positive because I'm like, well, what's the world going to look like now and what's the world going to be? So it's things like, well, Zoom and Teams appointments where they've done things. So I'm like, right, I'm going to go down the tech side and the online side so we can deal with clients across the country. Whereas a lot of advisors were still working in filing cabinets and face-to-face meetings and things like that. We don't have a single filing cabinet business. Everything's completely digitized. Which has really been a massive driver for us. And so we're quite proud to have clients from, you know, all over the UK, you know, from London, where I've taught in the Isles, and we help people buying houses and refinancing. And it doesn't matter where you are in the world, I just need my laptop and I can work, which is good. I'm not restricted to being where we are. That's because the foundation we managed to let COVID. Which
key point is that you've seen an opportunity that the world's changing. And I mean, I come from a world where it was Skype, right? So I used to use Skype all the time because I was dealing with people in America, Europe, New Zealand, and you realise that the world becomes a much smaller place.
Oh, absolutely, yeah.
But when you look before COVID, there was still a lot of the businesses and a lot of the thinking was still at regional levels. Whereas COVID then bringing in, and that was one of the good things to come out of COVID, apart from obviously both of the businesses, right, is that people were using technology now to try and become more efficient and effective. And you've seen that and actually went and addressed that, and it's obviously been a key catalyst in getting you to where the business is now. Because the days of having to jump in a car or jump on a plane to go and see someone, they're gone.
Yeah, it's really inconvenient, especially because most of my clients, we've deliberately targeted ourselves at high net worth and complex income.
Yeah.
You know, it's a lot of advisors in our industry just like the standard, easy, straightforward stuff and shy away from the complex stuff, where we thought, no, there's value in being able to offer that for people. And a lot of these people are running businesses, so they're not going to have time to sit with someone for 2 hours, whereas we can send everything out in advance to get like their, you know, the soft facts, like their dates of birth, etc., and fill in most of a fact find and get the accountants to send over their income evidence. Our advisors can then sit and go through all of that before they even speak to the client to then go, right, I know exactly what I'm going to do with you and where you're going to go to as well. So it's been a massive driver for us. But the other thing as well, the banks have also had to move on the back of COVID too. And a lot of banks now are using things like automated valuations. They're using automated verification of income for employed people as well, not even needing to get pay slips now. They're just going straight to the revenue, and they can ping, right, if someone's on a £40,000 a year salary, they can dip in, see exactly that's what's declared to the revenue and just go, yeah, that's it. So we had the mortgage application go through a lender there in about 30 minutes. And that was all automated income, all automated, you know, valuations.
It should be.
It should be. But it's amazing how many banks aren't like that at all.
It's the evolution. You've got, we see it all the time in our industry. We've got sectors that are, not new sectors, we've got customers within certain sectors that are evolving so quickly and moving at pace. And then you've got the snails behind them that are just, oh no,
they'll just be left behind.
This isn't coming 100%. This isn't coming. Oh, we don't need to do this. Why are we changing it? We've always done it like this. And you're right. They'll be the ones that are left behind.
And it's one of those things now. The frightening fact is 85% of all mortgages are done through brokers now.
Right, are they?
Very few people use and go into a bank branch now. I think the news this week as well that Lloyd's Banking Group are shutting 100 branches across the UK now as well. So, and it's frustrating because I walked by one of the banks a couple of weeks ago, and you know, the whole bank was shut till 10 o'clock, and there's a huge queue of people, all elderly people, you know, and older people wanting to go in to speak to their banks. And I'm like, there's no reason for them to open at 10 o'clock now.
No,
you know, they're keeping to the pandemic hours and things that they've done, and you know, they've just decided that's why a banking. And then there's all these challenger banks that's coming in the background, like your Starlings, your Alicas, your Tides, your Lonzos and things. We moved all our business banking to Alica as well. Absolutely phenomenal. But, you know, and just as an example, we banked for 10 years, or I've banked personally for 10 years through business banking with a major high street bank. I set up another business, and to try and get an appointment to set up a bank account for the other business was an 8-week wait time. It was just mental. And then I spoke to Alica, and they're like, yeah, we'll switch your entire account and do it in days. And it was phenomenal. You know, and you've got...
Who's your account manager?
Ali.
No.
So,
we've got Craig.
Right, okay. So,
good guys.
But I mean, it's one of these things. It's like the world's changed so much, I think, the last 5 or 6 years, and especially with sort of lending and how people go about getting funding. You know, and it's good if these banks are attracting, you know, solid businesses to come and invest their funds with them and do their business banking. It means that they're going to be able to offer out for things like, you know, if someone's wanting a commercial loan, for example, you're not having to go to the traditional banks, the traditional high street. You know, you've got all these other options, and the nice thing is they're able to look at things slightly differently, you know, and have different criteria.
They can look on it based on your growth. It's not always about your history, and that's what annoyed me about some other kind of larger banks was they're not interested in your growth. They're just interested in your past.
Yeah. And gone are the days where you can go and it's the same with mortgages. There's a couple of mortgage lenders still around that kind of work where you can present a case to them. It's like, see, 25, 30 years ago, if someone's wanting to buy a house, they go and sit with their bank manager. Bank manager know, here's what you earn, here's what you've got in your bank account.
They know
here's what you've got. Yeah, absolutely. And go, right, we'll approve your loan. The bank manager done it. Or send it off to a team to basically approve it. Nowadays, everything revolves around this credit report.
You
know, it's all make or break basically on your credit profile. And a lot of people don't understand how credit works as well. So it's one of the things we're trying to sort of educate people, especially younger people as well, trying to get into schools and things like that, to try and show, look, if you are going to go to university, the first day you walk into uni, you got your freshers week, all the banks are standing there and they're all going with your interest-free, credit cards and your, interest-free overdrafts. And the minute you walk out of there, you're in debt because they don't understand how to work money. And then whenever they leave university, they've not just got their student debt that they've accumulated for their tuition fees and things like that. They've also spent all their money partying and going out, don't understand it. They might have some missed payments. So whenever they eventually do get a job, they're not in a position really to buy a house.
Been there. Got that t-shirt.
It's so common, and it's amazing. Like there's all this education around loads of things, but whenever it comes to financial education,
everybody shies away from it.
Yeah, no one's wanting to sort of talk
well,
about
I've got 2 kids of my own, and then I've got Heather's 4 children. You can come round and do a seminar in my dining room if you want.
Absolutely.
Right, so we're bringing Iain in to do a financial seminar for you. It will be like going to a school.
Sounds good.
And then you'll just have the 5 dogs sitting there looking at you going, right, when does the treats come out?
Absolutely. So, but the thing, it's just one of those things, and I think because everything is going digitized and everything is relying on credit reports and so on, and that's one of the things whenever I was talking about us investing in technology, one of our main CRM system, our customer relationship system, has got built-in credit report systems. Because whenever you speak to clients, it's like, right, tell me what you've got, loans, credit cards. Nobody knows. It's an amazing amount of people have no idea what they've got. What's your credit card balance? Oh wait, I'll just log in and I'll check it. Now, for me, I know if I had a credit card, I'd know the exact pound and penny I've got on it, but that's just how my mind works. But the amazing amount of people have no idea what they've got. How much is your car a month? I have no idea. I need to log in my bank and see what it is. So with us being able to get someone's credit report up front, we can see all that information. And that's the bit that really helps us be able to go, here we go, we're going to put you to the right bank first time. I think with people, whenever they're trying to buy properties, and here's an interesting fact as well, a lot of people go, major high street lender, Royal Bank of Scotland, for example, if you're going to go and speak to them about a mortgage, you're looking at probably about 3 hours of different telephone-based appointments to even get to the stage, and then do what's called an affordability check, where they'll go, based on your income and your expenditure, we will approve a mortgage of £200,000, right? And people go, I can go buy a house for £200,000, but they don't credit score you.
Right.
So they have no idea what your credit profile is like, whether or not you're going to get a pass or not. So someone then goes out and goes, oh, bought a house, I want to get a mortgage.
I've just put a deposit down on a new build, for example, 500 quid.
Hear from a mortgage, then go through, oh, we can't give you a mortgage.
Yeah.
It's like, how? Oh, well, you missed a payment on your credit card 8 months ago. We're not going to do it. So we want to take all that fear and sort of uncertainty out of that, which is why we'll get a lot of information up front, but we'll kind of mini underwrite the case before we're going to put it in front of a lender, so it's going to stick.
So you are, say, 80%, 90% confident that when you're putting that forward to somebody,
it's going to go.
It's going to go. Which takes away a lot of the stress and hassle for the person who's asking for that mortgage.
100%.
Because basically, when you're saying, right, by the way, I'm going to put this through, but I'm very confident that you'll get it.
Yeah, absolutely. And we'll get a proper mortgage in principle done, where they've actually had a physical credit check done as well. So it means then, it's like a pre-approved credit card, I guess. They can just go out and go, right, actually, I've got, Halifax and Nationwide in the background who's going to give me the money to be able to buy my house and, afford to do it.
And that's one of the things as well. So see, obviously, the uncertainty of the whole buying and selling of properties as well. If you're going there and you're saying, especially you're a first-time buyer.
Yep.
A first-time buyer and folk are like, that's good because you've not got something to sell. But have you got your mortgage in place?
Yeah.
They're walking in and going like, my mortgage and everything's in place. I've got enough here that I can buy your house. There you go, sell me it.
That's it's one of the things. I mean, my background, I've done this 21 years, been involved in property and mortgages, and worked for major high street estate agents as well. And it's not always whenever you're coming as a first time buyer, because most things now are going to closing dates. It doesn't matter if you're first time buyer or moving up the chain. Chances are you're up against somebody else as well. So it's not always the highest offer that wins in closing dates. It's the person who's most proceedable, or it should be. Because if I'm selling something and I've got 2 offers and there's £500 between it, one person's a first time buyer who's good to go, mortgage approved, and the other person's to sell their house. Take the ready money every single time.
Aye.
And but the problem is a lot of estate agents don't do their due diligence, right?
Yeah,
because they're buying cash.
Aye.
And then they go and apply for a mortgage in the background because they're not checking it, and then that's when the issues come along with buying property. But I mean, it is a bit of it's nervous for everybody buying houses, sellers and buyers, I guess. But we want to make sure, you know, the first protocol, in my opinion, for anyone who's even thinking about going onto the market or even wanting to buy a house should be to speak to someone like us. You know, we need to work out what you're borrowing, how much you can afford to get, what it's going to cost monthly. More importantly, can you pass a credit check on it? And then you're let loose onto the market to then see what's there. So many times over the years, in fact, it happens every single week. Someone phones up going, "I've had an offer accepting a house and they get a mortgage. Can you help?"
Right.
Like you've done this the complete wrong way.
Aye.
You know, you don't even know if you can get a mortgage in the background. And we have it quite a lot as well. Where people going, "Oh, I will go and view this house." You know, especially self-employed, you know, they've got an idea of what they think they're like because of what they're making, and they could be miles off what their actual affordability is, depending on how their accounts are worked as well. So we just want to take all that risk out.
We'll go into the business because I do want to deep dive into the business owners one in a minute. I'm going to give you two kind of funny things. So you talk about people going there to buy houses, and one of the things that I think is amazing right now is I don't know where people are getting the money to pay the over the asking price that's going for some houses just now. I mean, I was talking my nephew in Kelsey, they were looking at houses. Say it was it's obviously first time, so they're just buying a house. So say we were looking at an ex-council house for 120 grand or whatever they were looking at. Now it's gone for like 160 grand. So people are then, so as well as your deposit for your mortgage, you're then got another 40 grand sitting there to put towards. Where are these people getting all this additional money?
Well, actually, there's a couple of things with it. So that relates to like the Scottish market, because in Scotland, which I actually don't agree with, because Scotland's different from the rest of the UK. Scotland, you get a home report to be able to list the property. So surveyors went out and basically said, this is your market value before it even hits the market.
Yeah.
And that's what all the banks and everyone goes on.
I based on the one down the street sold
a year ago for this.
When the market was higher and it was much better spec and it had a fantastic garden, and yours is a pile of
But then if someone's going down in England, Wales and Northern Ireland and going, right, I'm going to buy a house, the estate agents put it on for this and there's loads of interest in it, then they agree an offer, then the bank will send out a surveyor and go, right, okay, there's 6 or 7 people interested, this is all what they've offered, and yeah, we think the property's worth that. So in my opinion, from that, the English, Northern Irish and Welsh market's much better.
Right, okay.
Because you don't have this whole over home report thing. But in Scotland, there's actually quite a few lenders will ignore the home report.
Right, okay.
So see if it does go to or to go to a closing date, we can actually say, look, for example, if it's 160 with home report of 140 and they're 20 grand over, the bank will actually send out their own surveyor and they'll speak to the estate agent and go, right, actually, do you know, was this the only couple that paid 160? Was everyone else about 140-ish, give or take? No, with 8 offers in and they're all round about that range. That's a market value. That's what the market is prepared to pay. So they'll completely ignore the home report in the background. So it means whenever the people are wanting to buy, they maybe don't have to put anything over home report. But an experienced broker will know that. But if they go and speak to their high street bank, they'll have no idea about it.
That's so, but there you go. Anybody that's looking to buy a house, go and speak to Iain, because I didn't know that. And there's people out there that are having to try and find 20, 30, 40, 50,000 pounds out in savings or whatever, and that's a huge amount of money to be paying out your own pocket and not mortgaging in a property.
I think the thing is, for a lot of people, it's working well for home movers. So people maybe bought like 2018, 2019 who've seen their house values increase significantly. They've got the equity to be able to go through into that. I feel really sorry for people. Not the first time buyer market. It's hot.
I mean, but that's what I'm saying, but there's people doing it. And you're going, where are you getting your hands? So that you're a first time buyer, right? You're usually you're kind of younger. There must be some mums and dads and grandparents and all that kind of stuff out there that are emptying the chest of drawers.
It's exactly where it's coming from. The Bank of Mum and Dad's now one of the largest lenders in the UK, as it's known as. So we're seeing lots of people, and it's good because mortgage products are developing along that as well. So we're also equity release qualified. We're sitting what's on the Equity Release Council, and they deal with later life lending. So we've got grandparents who are sitting with, basically asset rich, cash poor, property's all paid off, it's worth X amount of money, the grandkids would inherit it at some point. What we can do for them, and what we have been doing, is releasing funds for them to be able to gift away to kids and grandkids, be able to get them onto the ladder.
Dad, you're listening to this, right? Listen to Iain, you need to go and speak to him, right? Get some of the money that's in your property released, I'm skint, right? Give it to me. I'll keep a hold of it for your grandkids.
Aye, Jamie wants a villa in Spain.
Aye, villa in Spain, that'll do. I'll let you come every now and then. But but that's amazing though, because again, no, see when it gets, and another thing, I don't know if we should be saying this, but I'm going to say it anyway. So you've got your grandparents, for example, right? They end up with an illness, say it's dementia, say it's something like that, right? And then they're getting into some sort of home.
Yeah.
Everything that they've worked for all through their life then just gets absolutely ripped from under them.
Yeah.
So see that, does that kind of half protect them? Because so say the house is worth 300 grand.
Yeah.
Right. You then do an equity release on that. So that then, how does that all work?
It can do, but again, if they're gifting the money away, then if it comes under what's known as a potentially exempt transfer for inheritance tax purposes. So it can get a wee bit sort of more complex down the line with that. But again, it is a good way. People do put equity release loans on to try and reduce down inheritance tax and care home issues as well. So it does happen, but it's one of those things. It's a good way for being able to give the that generation that need it. If they're going to inherit it one way or another, that's it. The downside with equity release is if someone does borrow, for example, £50,000 out the house, they don't have to make any payments to it a lot of the time, but those payments get added on to the loan. So over time that grows. So they might borrow 50, but end up, if they survive maybe 10, 15 years, have to pay back 100 off that, to that. But
sorry, Andrew, cut that bit out, would you? Right, so my dad doesn't hear that.
Well, it just affects your inheritance, I guess, at the end of it. So, but no, I mean, that's a nice thing with what we do as a business as well. And what I've got, I've got myself and Lauren who works for me. We put her through equity release exams too. Yeah, we're the only firm in Ayrshire that's on the Equity Release Council website for being able to, just it shows we go that higher standard. Be able to do the right
just
thing
a
by
mortgage
clients.
Advisor. You're actually trying to do.
We can look at it all.
Looking at it from a lifelong relationship point of view, rather than just try to get somebody a mortgage and then see you later.
Well, the thing is with us, it's like if someone phones up an equity release provider for an equity release product, that's what they're going to get. Because under the FCA rules, you phoned us, this is what we can offer, here we go. But there's actually a hybrid that sits in the middle between a normal mortgage and equity release, which is called retirement interest only. Right. And that works on effectively a basis of an interest only mortgage, but there's no end date to it. So if someone's got like a good final salary pension scheme, for example, and can maintain those payments, we can look at that. So because where we sit with the whole thing and we do equity release and mortgages, we can advise people properly on it and going, actually, I know you maybe came to us for equity release, but you fit one of these other products, which is going to save you a lot of money in the long term. So we'll do that instead to try and help people out. So it's nice to have everything available rather than just, one or the other. I think
that's where one of our USPs is our business is we're independent. So we help people get the right technical and commercial solution for their individual application, because there isn't always a one size fits all, and you get companies out there that will go to them and say, right, make and sell this box. So that's what you're getting. Whether that box is the right thing for them, that's all they've got to give them. So it's in a similar vein. No, that's brilliant. So I didn't know any of this, and I speak to you quite regularly. so you need to back at yourself better.
Absolutely.
Right, there you go. Right, LinkedIn Live, Andrew. Right, you need to get your finger out. So no, I think that's mega interesting, and people, obviously, people that your normal everyday Joe will not know this.
Well, and this is the thing. I mean, the mortgage products have developed so much over the last few years because property values have really stretched out, but incomes haven't followed suit with it as well. So there's other things like what's known as joint borrow sole proprietor. So if you've got maybe a young couple or that are on like a sort of starter, say graduate income, they're coming through and wanting to buy somewhere, and the location needing to get into West End, Glasgow or Edinburgh, for example, where things are a bit more expensive, maybe can't quite get the affordability they need. They can actually go on it with a parent, and some lenders actually don't need to be parents. They could be anybody. And it's known as joint borrower sole proprietor. And then they can actually use that person's income to help boost what they can afford to do too. But the good thing is, because it's a joint borrower, the income's taken into account, but because it's sole proprietor, the other person doesn't go in the title deeds.
Right, so
which means they don't pay second home taxes and things like that as well. So they've got to get independent legal advice because basically they're carrying all the risk with none of the fun.
So hopefully none of the kids are watching this.
Correct, but it's great for kids and getting kids started. But we've got a lot of clients, for example, if the kids are going off to uni, the price of university accommodation, for example, is mental. So they might go, well, do you know what, I can buy a flat in the West End of Glasgow, 180, 200,000 pounds, for example, put it in the kid's name. And then mum and dad's income will support that as well, which is fantastic. But because they're not in the title deeds, they're not paying second home taxes and things like that as well. The kid can then live effectively on that, and the cost of the mortgage you can find would be the same price as rent. However, they've got an asset now.
And they're renting out 4 other rooms and they're getting an income out of it.
Well, that's it, yeah. So,
there's always a way.
But that's it. But it's all these wee things. Again, a good broker will be able to sit down and talk to people about it, but loads of people don't know about it.
100%, I didn't know.
And but it's ways that there's always ways of getting funding, for things like that as well. But just with people coming onto the market, when you were saying there about the bank of mum and dad, it's like parents are really wanting to help their kids get started because it's hard. 100%. But if I look back to whenever I was probably in the market, 20 years ago, it was hard for me back then as well.
It's not changed.
It's not changed. It sounds like it's changed, but it's not.
It's not.
Everything's got its own complications and how things are. But mortgage products are developing over time. As the banks want to lend money. That's how they make money, and they're looking at avenues of which, well, how can we make more? What new products can we come up with to help people get started onto the market? There's another really good one as well for people who have been renting, for example, long term. Skipton Building Society do what's called a track record mortgage, and if someone can evidence that they've been renting for say £800 a month, and maybe the new mortgage payment would be 600, Skipton will do that for no deposit.
All right.
And go, well, you've been able to evidence you can afford £800 a month.
Yeah.
Your new payment's £200 a month cheaper. We'll quite happily lend you 100% of the mortgage.
Fantastic.
So they don't have to even pay it. So because of the tax changes around what a lot of the government's done with buy-to-let landlords and things like that as well, there's landlords offloading properties. They're able to then go to their tenants and say, look, you've been here for years, the property, it's valued 120k. Do you want to buy it off me for 120k? They're saving estate agency fees. And the tenant, chances are, because most of them don't have deposits saved up, are able to go, well, yeah, I don't need a deposit.
It's a great product. That's a great idea. Because you're right. There's a lot of people who are still in rental accommodation because they can't get a deposit. And then we're back to the thing we spoke about, where they're going and they need to try and get an extra 30 grand on top of any deposit to try and get a house. Yeah,
and the thing,
Skipton.
There's also a couple of options as well, because. And again, I wish more banks done this, and it's a shame that they don't. And some people think that's madness, but from my opinion, I think it's a really good thing, because there's banks out there, and a particular bank, I'm not going to name any names as such because it's a broker's secret, but basically you can take a bank loan out for the deposit.
Okay.
So
Northern Rock used to let you do that.
Northern Rock, exactly. Northern Rock does.
So Northern Rock used to let you do that, and then look where they go.
But they were doing 125%.
Listen, you don't need to tell me. My first mortgage was Northern Rock.
I think everybody's was.
Andrew's was as well. First mortgage, Northern Rock.
I can still remember the application form, filling them all. We've done that many of them, but it was a big thing. But again, what they'd done was a 95% mortgage product and then a 30% unsecured loan against it.
I was only 112% used.
That's not too bad. So, but basically, so this particular lender will do up to 95% of mortgage, and then they'll let the client go and take a bank loan from another bank to be able to do it. So if you think, for example, of saving up £10,000 to buy a property, that could take someone rented accommodation years and years and years to even get 10k saved up to be able to buy their own property. But that £10,000 over 4 or 5 years could be £200 a month. Now, if they've got the affordability to be able to have that bank loan factored into it, so as part of the application, we've got to say, look, the person's getting a bank loan. This is what the cost is, and if it fits that that particular bank's affordability, they'll go, yeah, why not? Let them take the bank loan because they can afford to pay it back. Because that person might not have any car finance, might not have any credit card debt. So in my opinion, that's a great way of getting people onto market as well. So you don't even need to add deposit with some lenders.
Brilliant. No, that's brilliant. The second thing I was going to talk to say on that, as you say about obviously it's not always the person with the that's offering the most. It's the people who are obviously they're ready to go. Yeah. Right. So obviously, I don't know if Joel told you this, but see when obviously I was going to build that place and that didn't happen, blah blah blah. So then we were looking at a house. So we looked at a house in White Avenue. The house in White Avenue had been up for sale for about 6 months. They reduced down in January, right? And I went in March. Obviously, I decided I wasn't doing the barn, and and then went to see this thing. So it's been 3 months, it's been sitting on the market, went to see it, went and spoke to the guy across the road, asked if many folk had come to see it, no, there's not really been a huge amount of interest, and told us the ins and outs of what the whole thing was with it. So I'm like, right, okay, I'm going to go and put an offer in this. So I put an offer in, and then the estate agent come back to, so I phoned, put a verbal offer in, and says, let me know, and I'll get my lawyer to put it in writing to you. Never heard anything back. So I phoned that afternoon. I went, what's the thoughts? Went, we've actually been offered we've had another offer in today also.
Oh.
Right. But that offer's come in at the home report value. And I'm like, you are at it. You are completely at it. So I'm like, nah, there's no playing this game. But he's like, he says, do you want to match that? I was like, no. So went through the whole process, blah, blah, and I'm like, he's at it, they're at it, they're at it, they're at it. And what are the chances? They weren't at it. So this had lay empty for over 6 months. The day that I go and see it, right, and put an offer in, somebody else puts an offer in. Because where I went with that was, I'm like, I'm a cash buyer, I've already sold my house, I'm ready to go, I can move in. I can take the title deeds over as soon as you can get them written. The money's there, the mortgage is approved, everything else. These folk are the same. I'm like, you're totally at it. Right, so you're going, what is the chances of, one, somebody coming in and offering the home report value at that point? 2, they've got nothing to sell. 3, everything's sitting there approved, and they're a cash buyer. And I'm like, that's just... But ended up it was, right, and we missed it. But thankfully we did, because the house I'm in was better.
But that's it. Things happen for a reason.
Correct.
And the amount of clients, I mean, I've had clients, especially the last few years, there was one of this particular girl had offered in sort of 13, 14 properties, and it got to sort of last 5 or 6 and tears, just not getting onto the market, keep losing out. And, it's always that one, and it's hard at the time, but the right house is always there for you. You just don't know it yet. And what's for you won't go by you.
100%. Well, that's always been a philosophy of my life. That's what it says. So we left that. So that was I think we got the news on the Sunday. We're driving down the road, and I was like, only if Ashley and Andy would put their house up for sale. Tuesday was a thing on Instagram.
Up for sale.
Going to be putting my house up for sale. Message her straight away, like, don't even bother, I'll be around tomorrow night and I'll buy it off you. Yeah. She's like, you sure? What? And I went round and went, I says, we'll take it. I says, you're just agreeing what the price is. Yeah. Perfect. And then all worked out. Aye. Now I'm completely skint. Yes. Right. So now we're going on to the bit that we really, I think people can get value from then is directors trying to get mortgages. Yeah. Because if most people that are in kind of growing, scaling businesses and new start businesses, as the leader, owner, director, founder, 9 times out of 10, you're not paying yourself. Right? Especially not paying yourself what you're due or what you should be getting. So you're sitting there trying to juggle a lot of things, and obviously moving house is probably something that you don't really want to be trying to do at that early stage in your business, or even when you're doing that, because you've got all these concerns, but they don't have to be there. So tell us about how that all works and how these directors can get themselves a mortgage for a house that they actually want. Absolutely. Well, I think one of the sort of misinformation parts that loads of directors get wrong with is they think they can just pay themselves a salary, like a wage, and just take out X amount of money, and after 6 months go and get a mortgage, even though they're self-employed. Right. If you've any shareholding over 20%, the banks will just treat you completely as self-employed. Some banks are even 25% as well. So, it's more than just a salary. Some people go on the £12,500, minimum salary, and then take on dividends. And this is a good thing with being a broker, is that there's loads of different banks will treat that completely differently. Yeah. Because some will go with 1 year's books, which is great. There's not many banks, there's maybe 2 or 3 that'll do it. One high street, and the rest tend to be quite sort of specialist with it, and you do pay a wee bit more interest for that. But 1 year's solid book, salary and dividends, they'll go on it absolutely fine. Most banks will work on your average of your last 2 years' salary and dividends, and that's common sense, I guess, because you're going about, well, was it a one-off year, or is this a consistent income before we go and lend you £300,000 or £400,000? So were some banks, I remember doing this exercise to show someone, and I'll use this as an example with Halifax versus Coventry Burnside. This was about a year ago. Halifax is, now can do this, which is good. But at the time, major high street bank, we'd ran it through with someone with salary and dividends, taking out, I think, £80,000 between the two of them. And Halifax would give maybe a mortgage of about 300 odd K.
And then I compared that against Coventry Building Society, who would use salary and net profit, because the business owner was like, well, I could take more, but I don't need to live my life because I'm going to get hammered for tax, and this suits me absolutely fine. So the types of lenders that will work on your salary and net profit, the particular chap in question had I think £150,000 net profit. We're able to give him a mortgage up to 700.
Right.
And you wouldn't know that and so many people make the mistake of just going to their bank and go, can I get a mortgage? And your bank will just give you what their criteria is.
Yeah.
They're not going to tell you, by the way, if you go and speak to another bank down the road, you'll get double the amount of money
Yep.
on it as well. So there's loads of different ways of working it. But the big thing is we try and, I like to view our job as like the sort of jigsaw puzzle. You know, someone comes to us and is all trying to fit the right pieces with who needs to go where. Because there's some directors who are absolutely fine with salary and net profit, but then there's the ones that come to us that take very few dividends, but are got really, really good healthy business in the background that's there. Some will average it, some will work off the most recent years. So if it's someone that's scaling up a business, you know, and having to reinvest maybe 1 year, and then they've now got a really good year behind them, where an average will just kill that because they'll go, well, I only made 20 grand last year.
That was us.
But I've got 150 this year. You know, we need to then put them to the bank that's going to work off the most recent year rather than averaging, just to try and get them what they want to do as well. So that's whenever we then start getting involved with accountants and, you know, getting references and so on, and just getting a bit more involved with how it all works. But there's also the entrepreneurs out there who've got multiple businesses. And, you know, they may be taking a bit from this and a bit from this and a bit from this. And it used to be where banks were working off accounts, give us the accounts. And you were sending them off to an underwriter, and underwriters were sitting piling, you know. Do you know how to read a set of accounts?
Yes.
You doing? Did you?
Did I have done for a wee while, but if you look 5-6 years ago, maybe more than that.
The amount of business owners that haven't got a clue about their accounts is unbelievable. So, you know, and they'd sit down and then the accountant would just send over the information with us, and our team were having to drill down and go, right, net profit, salaries, you know, directors' dividends and things like that as well. But the revenue now produce what's called tax calculations, or what used to be SA 302s and tax reviews. And that's someone's actual income they take out across the board completely. So it'll show like profit from employment, which will be your 12,500 salary as an employed director. And then you'll see like your dividends and so on as well. And then if someone's maybe got a wee sole trader income on the side as well, it'll pull that through too. So that one document gives the bank everything they need to know about someone's income. So rather than working through multiple pages of accounts and maybe over multiple businesses, the revenue now produce one document that just goes, there's that person's income they're paying tax on, and they'll work on that too. So, which is good.
Good. And see, if you look at obviously your clients, what would you say percentage of them are actual kind of business owners, directors, founders, types of things?
We have quite a lot, and again, it's because whenever we set Monarch up, it was deliberately aimed at complex and high net worth, because I see the value of it, you know, and it's really nice to be on that journey. You know, maybe get someone who's starting off in a business who's buying their house at 150. Just getting on. But because we want the longevity with clients, you know, it's then, right, are they coming back to us and buying one at 400, 700, a million, you know, as this new time and so on progresses. So we do quite a lot with that. And because also as well, what we're seeing just on the limited company side of things and company directors, for people who are investing in properties now, are setting up limited companies and buying things through it too. And initially, whenever all that came out, loads of brokers went, I don't want to do that. That's too complex. I don't get it. We deliberately threw ourselves into it and thought, right, we're going to learn we're going to learn all we can learn about this, because while everyone else is saying no to it, we're going to be the ones that'll do it. And we want to be known for helping people out with limited companies for that. And that's what's happened over the years. So we've got limited companies getting set up with buy-to-lets, and then these people are setting up businesses and progressing themselves. So we do a lot of self-employed mortgages. And I think what we're seeing now as well is probably since COVID, there's more people going self-employed and setting up businesses and things like that too, which has been really nice. But and I think the big thing that a lot of people make the mistake of is, again, like anybody, they go on Rightmove, they find a house, and they've not spoke to someone to actually see, look, what can I do? Is there a bank in the background that can help me? So I think that's the best advice I can give to anybody who's, regardless of employed or self-employed, we should be your first port of call. Before you even speak to Rightmove and estate agents.
Well, obviously, Joe's obviously dealt with my mum. But if she was to phone one of yous every time before she went on to Rightmove. By God, you'd be busy.
Yes,
Right.
really.
She sits on it all day, every day. Aye, no buying houses. Honestly, you get, and actually, it's an unbelievable amount of people who are just nosy in Rightmove.
Oh, love it.
Rightmove's like a social media platform for them. They just sit there and look at houses.
And they'll share them to their, oh,
Aye.
look at this house, etc. And, you know, don't get me wrong, you know, I'm into cars, so for me that's Auto Trader.
Aye.
You know,
Aye.
going through it. But if you're into houses, I guess then Rightmove works pretty well with that. But it's one of those things where, I mean, everyone's, as a business owner, you know, you're setting up for yourself and you have aspirations, you know, what do I want from life? Or you should have, you know, if you're ambitious to be able to set up business. And, you know, you might be here, but you're going, look, I'd love to have, you know, a 4-bedroom detached house, or I'd love to be able to have something in the country. And, you know, I think that's the nice thing with us, you know, is working with clients and getting them on board with us to be able to then go, right, where do you want to go to? Well, this is where we are. Yeah, well, we can help out with foreign mortgages and things like that as well. So you're ready for your dad's gifting you the money anyway.
So it's dead easy. I'm just going to go into my dad when I get home and say, right, by the way, you need to speak to Iain because I want 100 grand out of your house. Right, because I'm going to buy somewhere in Spain and you can use it. We get 2 days in the summer.
Aye, and I'll
sort out for us.
Aye, I can get some free weekends or something. I'll not charge you a fee.
That's it. That's it. It's all about helping each other.
Absolutely. So so I would definitely convince your dad for that. That sounds like a plan.
We'll go on the phone and we come here. Right, okay. Listen, well, I know personally how helpful that was to me. I know obviously Kane's been through the journey as well, and I know a couple of other people through the journey. So I know how beneficial it was actually working with you guys on that for myself. So that's why I was keen on getting you on the show, because there must be hundreds, if not thousands, of people that are sitting right now going, I want to try and move, or I want to try and do something, and I'm in a position just now that I'm only paying myself £1,000 a month. How can I do it?
Yeah, absolutely.
So hopefully if there's anybody that's watching this, they'll maybe look and say, right, okay, I'll reach out to you and you can see if you can help us.
That's where I think the banks with the net profit. And I'll tell you this, there's very few high street banks will work off that. Very, very few. So you do need to speak to a broker on it. And again, that's just smart tax planning. If you don't need to be paying yourself 80, 90, £100,000 a year and paying, you know, higher rate tax, don't do it. You know, you don't need to be able to get the mortgages. If the money's in the business as a retained profit, you know, then net profit, then, you know, there's lenders out there that'll lend to you, and high street interest rates as well. It's not specialist. It's just having the skill and speaking to the right people to know exactly, right, we'll put you here because you fit that criteria. The client then saves an absolute fortune in tax, because we've seen it before where clients are deliberately taking more out because they know their mortgage is due up in maybe 2 years, and they're going, right, well, when I get it done, they're coming off a 5-year fixed. They're getting hit with tax because they know that they want to maybe refinance, put an extension on or something like that. And where they don't need to be paying themselves as much money when there's other banks will do it. So,
and I think that we've been doing a lot of discussions about obviously how to best manage the tax, the tax that people are paying within our business, all that, and talking to people about pensions and how they can be more tax efficient. And that was one thing that's even where obviously I made good money where I was before, and I never had anybody give me help with that. So that's why I'm so passionate about trying to help others where we can. And because there's ways of making sure you can be more tax efficient, and rather than, and it's not that you don't want to pay the taxman any money, but at the end of the day, you work hard to get to somewhere, and then you basically just lose everything that you're doing. So if there is ways of trying to manage that a bit better for you as a person, then
well, it doesn't just sort of work with mortgages too. Like certainly as business owners, what we're seeing is a massive rise in things like private medical insurance. We're doing a lot of that. That had a 400% increase last year. I think, you know, for business owners to go, well, looking at their balance sheets and going, well, how do I get more out for me? You know, and they're able to set up their private medical schemes for themselves. They can put their partner on it as well. They can put the kids on it. I've had it now for years. I've had 3 knee surgeries through it, you know, and I think as a business owner, it's crucial. Like if something happens, you're in straight away. Surgery's booked a couple of weeks later. You're back on your feet again quicker.
You get a laptop open in half an hour.
Exactly. You know, and you're getting the best of service, best of treatment. I think for me now, certainly as a business owner, that's vital.
Much so, because you were using Vitality, weren't you?
We use Vitality. Well, the thing is, we've got Bupa, Vitality, and Aviva. You know, we've got quite a few different providers, but I'm a huge fan of Vitality. And I think, see, as an employer as well, certainly the Vitality schemes, if you're going to offer out to your employees especially, it's almost like a perks package too.
I've seen it. Don't get me wrong, the people for Vitality, the salespeople are they're on the ball. They're a pain in the arse. But the scheme itself does look really, really good.
Superb. I mean, the thing is, if your employees, for example, are going out and getting their steps done, they're getting fitness, they're getting annual health checks all included as part of the plan. So if there is anything out there like high cholesterol or blood pressure, it's getting dealt with quickly before it becomes an issue and there's heart attacks down the line. So you're kind of protecting your workforce as well. But, from their point of view, they're getting cinema tickets for being engaging, they're getting half-price running shoes, they're getting discounts off bikes, everything, even things where they get the opportunity to get an Apple Watch all paid for by the insurance schemes. So you're not just giving your employee a perk, you're giving them an actual chance to change their lifestyle.
Yeah, 100%.
But after pension, private medical insurance now is the most sought after thing someone's looking for, because people are like, you'll know yourself, like trying to find people and good people is getting really difficult now. There's like a resource strain for a lot of employers out there.
In every sector.
Absolutely. And you're going, well, we want to not just recruit, we want to retain. And it's how are we going to be able to not just get staff in and win them from someone else, it's how we're going to get them to stay. And if you can get them and give them the perks like private medical insurance and things like that too, it's massive. It's certainly, if I was to go back employed and look to go and work under someone, it's definitely one of the things I look for, because I've used private medical insurance a few times now. Families used it, and it does what it's supposed to do.
I've used it umpteen times throughout my career. I actually used it just before I left court. So I was booked in for the operation in the March, and COVID hit. And eventually got it done in October. But by that point I had left.
Okay.
And they tried to charge me for a shoulder operation.
Nice.
What are you going to take off me? I said, I deliver Chineses for a living. Good luck. And
not knowing you had the monkey bars at the time in the background, just having
the monkey bars are part of the reason for the wrecked shoulder. I've been down there. I was in the offshore course racing World Championships.
I remember
in October. It'd have been October 2019, and just totally wrecked my whole body. Because I wasn't actually as good as I thought I was. and then so that was wrecked it then. Going to see somebody just before Christmas. Get it looked at. Back in January for a pre-op. Op booked in for March, and that's it. COVID hit.
Well, have I put my sort of thing? I've been self-employed since 2014, and I remember the first time I'd damaged my knee, and I was playing ice hockey and went over and I'd done my meniscus and there was also cartilage damage. I remember going in and phoning Vitality, and they said, right, someone from Ross Hall. Basically said, look, I've wrecked my knee. He says, right, someone from Ross Hall will phone you. And then half an hour. Got a phone call from Ross Hall. He said, right, can you come up Monday? See a consultant. Cool. Went and seen the consultant. He goes, have you got time today for an MRI? And I was like, yeah. Went and got an MRI scan. Following week, I was booked in for the results of it. And he said, right, this is what we've done. You have two options. We'll go through physio or we'll go through surgery. He says, I'd probably recommend surgery because then it's dealt with. If you're going to have to go through physio anyway, you might as well get the problem addressed straight away. Perfect. I says, yeah, let's do surgery. He goes, right, I can't do this Friday. I can do next Friday. So in the space of 3 weeks,
done
from consultant to operating table. Whereas for that injury, I think it's now 14 months to 2 years on NHS waiting time. So if you're a business owner with a knee injury who's having to walk about, drive places, maybe working in manual environments, that's going to massively impact you.
Oh, huge.
And the thing is, you can write this through the business. It's a deductible expense. You get all these perks and stuff with it. It's just mad how many business owners don't have it yet.
We've still not put it in yet, but we've been looking at it. So we'll we chat. You can maybe take away the pain of the Vitality Health folk being a pain in my ass.
Well, we deal with all them for you. So we'll just be your pain in your ass.
That's fine. So. That's fine. Right, okay.
The two years of entrepreneur winners in Ayrshire.
Oh, that's right.
So we are.
Actually. Congratulations, Entrepreneur of the Year. Did we won it first then?
You won it the year before me.
I think you won it.
I won it, yeah.
And then... in fact, was there one between us and George Taggart?
George won it last year. Yeah, so George was the follow-up then for myself, which was good. So
see, honestly, anybody still watching this, you're watching legends, right? Of Ayrshire. Sitting here, the entrepreneurs of the years. What was it? I'd have been 22, you're 23, he was 24?
No, I was 24.
Right, I was 23.
And you were 23, and then George was 25, so which is good still.
See. Look at us now.
Absolutely. So.
See that? Did you
few less grey hairs 2 years ago?
Was it a wooden one you got?
Oh, no, I got a nice glass one.
Did you? Because it moved on. So my entrepreneur ones is is basically, I think it's for Dundonald Woods.
Right, that's quite nice, actually.
It was just a bit of wood that's been carved out, but it was a hugely proud moment.
Yeah.
But I wasn't, so when I won that, I wasn't even there.
Aye.
No, Kane went up and got
Accepted
it.
it,
Because I was in holiday in Turkey.
Well, I actually won mine, and I actually was going through my second knee surgery.
That's
and
right, I
I
remember.
came out of hospital the Wednesday. I
Aye,
was told by a consultant to relax. The ceremony was on the Friday night. I thought, I'm going to go along just in case.
I can remember that.
And I remember hobbling up on stage in crutches, and where the table was around the back one, and it took me ages to actually get up there and stand on stage and hide the crutches and stuff like that. But
Right.
but
I
it
can
wasn't
remember. No, I can remember because you had your red velvet jacket thing on.
I did, yeah.
There you go.
Aye,
See,
yeah.
that's how impressive he was. I can even remember what he was wearing.
Ready
No,
for
no,
it.
no, I've got a thing for you or anything like that. Sounds a bit,
No.
sounds a bit perverted, doesn't it? I can remember what you were wearing 2 years ago. Right, I'm away. Right, well, we've actually run out of time, mate. I knew we were going. Betty, that didn't feel like an hour.
Definitely not.
Aye,
No,
amazing, isn't it?
definitely not. Flew in.
Right, is there anything else you want to say before we go?
Just basically, if anyone's self-employed, and in fact even employed, and wants to get moving, then we're here to help. The whole mortgage thing now is quite complex. There's so many lenders, so many lending options, even things like credit. I know Andrew's done some work on this with things like Klarna and these new ways of paying for things getting really popular that are destroying people's credit reports in the background. Big time. Yeah. So, for example, with Klarna, every time you buy something in 3 and you take out a new thing, that's a brand new credit agreement goes on.
So you've got 10 different things that you're paying through
10
Klarna.
credit checks, boom, boom, boom. 10 things, 10 on file. With one client is 57. He was just buying records and things like that. Just completely innocent with what he was doing. And yeah, bank just goes, no, not lending. The guy's got reliance on credit. Whereas if you've been buying them a credit card, it's just one transaction, just on a credit card. So these wee things people don't know are actually.
Don't use Klarna. I've been telling everybody that for ages. Don't use Klarna.
And it's mad, you're going into JD Sports now, you buy a £60 pair of shoes. Like, oh, do you want to pay it off in 3? I'm like, no. Just give me a £60 pair of shoes.
Aye.
And I get there's people in different circumstances, that need to rely on it, sadly. But there's people who don't need to rely on it.
That are using it because they're using it because they think it's just it's convenient.
And then screwing themselves down the line because they don't understand the impact of it as well.
So don't use Klarna. So if you take anything for this show, don't use Klarna. Right.
Absolutely.
Right. Unless you really, really, really need to, then just use it once.
Absolutely.
Right. And then if you really, really need, ask Iain, right? He's got hundreds of money. He'll sort you out. Right. Okay. Right. We'll leave it at that because I need to shoot off for another meeting anyway. So that was brilliant. And
I
knew it would just flow, right? Because I just knew it would, and it flew past actually even faster than I thought it would.
Perfect.
That was good.
Yeah, thank you.
Done great. Hopefully there's, as I say, there's some business owners, directors, self-employed people out there that if they're sitting there going, I don't really know what I'm doing, you can get in touch with you.
Absolutely.
All right, so good. Anybody that's still watching it right now, thank you very much. Anybody that's doing their Sunday viewing when they're obviously bored, I think what we've got is we've got hundreds of people that follows on LinkedIn that don't really go on too well with their better halves, right? Because I think they sit and watch this on a Sunday, they're always like, oh, I'm sick of listening to her, or I'm sick of listening to him. I'm going to sit and listen to Jamie talk shite. Oh, sorry. Right, okay, right. So, Iain, thank you very much for being on. Anybody that's still watching it, thank you very much for still watching. Anybody that watches this back later, get in touch with Iain if you're looking to get yourself a mortgage. Perfect. Cheers. Thank you.